An investor's toolset is the most important asset an investor can have to making the proper decisions for investing. Through careful deliberation and correct analysis of an investment, a savvy investor can apply their toolset for maximum investment returns while making proper adjustments along the way to keep on track toward their financial goals. In this video, I'll discuss the Rule of 72, what it is, and how you can use the Rule of 72 to invest wisely while doubling your money along the way. The Rule of 72 is just one of the many different strategies and techniques the wealthy use to build wealth over time. By following these easy steps outlined in this video, you too can double your investments over time in a systematic fashion, substantially increasing your wealth during the process. Get ready. You are now entering the Academy. The Rule of 72 is a simple way to determine how long an investment will take to double given a fixed annual rate of return. By dividing 72 by the annual rate of return, investors obtain a rough estimate of how many years it will take for the initial investment to duplicate itself. To calculate how many years it would take to double your investment on your assets, you simply divide 72 by the current rate of return of your investment. For example, if your rate of return is 4%, and your initial investment was $100,000, then it would take you 18 years to double your money. Let's do the quick math. Take 72 and divide that by 4, which is the percentage rate of return on a yearly basis. The result is 18, which is the number of years it would take to double your initial investment. Put another way, a $100,000 investment would double to $200,000 after 18 years at a rate of return of 4% annually. Another way to use the Rule of 72 is to calculate what rate of return you need to double your money in X number of years. So for example, if you invest $100,000 and you want to double your money in say 5 years, what rate of return would you need to invest it at in order to double your money? By using the Rule of 72, you simply divide 72 by 5 years and you get a 14.4% annual rate of return. Now, a 14.4% annual rate of return is considered a risky return, especially in the stock market. But in the right markets, which include real estate, this could generate a handsome return on investment every year. And the cool thing about the Rule of 72 is that for every X number of years after you double your initial investment, your money continues to double. So let's say from the previous example, you double your initial $100,000 investment after 5 years at a 14.4% annual rate of return. So after 5 years, your investment will grow to $200,000. But 5 years after that, or 10 years after your initial investment, your investment will double again, going from $200,000 to $400,000. This is the power of the Rule of 72, and this powerful wealth creating tool can be used on any type of investment. By employing the Rule of 72 in your investment decisions, along with reinvestment of the returns, your investment can double over time. By also adding principal to the investment, you can compound this effect even further. For example, let's take our $100,000 initial investment example. By infusing an additional $10,000 every year into the investment, after 5 years, your investment will be worth $272,000 instead of $200,000 by not infusing cash into the investment. And after 10 years, your investment will be worth a whopping $609,500 instead of $400,000 in the initial example. This shows the power of using the Rule of 72 with cash infusion on investment on a consistent basis, along with compounding your return on investment. The Rule of 72 can be a powerful tool for the savvy investor. Through diligent and persistent investing, an investor can double their money consistently over time. As an example, investing in the stock market on a consistent basis while investing in dividend income producing stocks that pay dividends on a consistent basis can be a great application for the Rule of 72. By investing on a regular basis, dollar cost averaging into your positions with moderate rates of returns, one can easily double their investment over time. Reinvesting the dividends while continuing to add capital to your investment can make your investments grow exponentially. Thank you for watching this video. Please make sure to smash the like button if you enjoyed watching. It will really help out the YouTube algorithm for bringing more wealth creation strategy videos to the masses. And if you haven't done so already, be sure to subscribe to the 10X Academy. And don't forget to turn on the notification bell to be alerted on more passive income strategy videos. This is the 10X Academy.